Hello and welcome to G Fun Facts Online, the show that dives deep into the fascinating stories behind the world we live in. I'm your host, and today we're going to talk about something you probably use every single day, but in a way you've never imagined. We're talking about money. Not the paper in your wallet or the numbers in your bank account, but the very idea of money itself. Because right now, under our noses, a quiet revolution is happening. A digital revolution that started with a mysterious online ghost and is now being chased by the most powerful governments on Earth. This is the incredible story of the evolution of digital currency, a journey from the disruptive arrival of Bitcoin to the global race for Central Bank Digital Currencies, or CBDCs. So buckle up, because we're about to decode the future of finance. Let's get started. To understand where we're going, we have to go back to the beginning. Not the beginning of money, but the beginning of digital money as we know it. The year is 2008. The global financial system is teetering on the brink of collapse. Trust in banks is at an all-time low. And out of this chaos, a figure emerges, or rather a name, Satoshi Nakamoto. To this day, no one knows who Satoshi is. It could be a person, a group of people, a man, a woman. What we do know is that in October 2008, Satoshi published a 9-page white paper online. The title was simple: Bitcoin, a peer-to-peer electronic cash system. The idea was radical. Satoshi proposed a form of digital money that didn't need a bank or a government to work. It was a direct response to the crisis, a vision for a currency free from the control and potential failures of the traditional system. The magic ingredient that made this possible was a technology called the blockchain. Now, blockchain sounds complicated, but the core idea is surprisingly simple. Imagine a digital notebook that is shared among thousands of computers around the world. Every time someone sends or receives Bitcoin, a new entry is made in this notebook. But here's the clever part. This entry is cryptographically linked to the one before it, creating a chain of blocks, hence blockchain. Because this notebook is distributed everywhere, it's incredibly difficult to cheat or hack. To change one transaction, you'd have to change the entire chain on thousands of computers simultaneously. It's a system built on transparency and mathematics, not trust in a single institution. On January 12, 2009, this theory became reality. The first ever Bitcoin transaction took place when Satoshi Nakamoto sent 10 Bitcoins to a programmer named Hal Finney. This was the spark. But for a while it was just a tiny flame, interesting only to a small community of cryptographers and tech enthusiasts. And here's a fun fact for you. One of the most famous early transactions happened in 2010. A programmer paid 10,000 Bitcoins for 2 pizzas. At the time, that was maybe $40. Today, those 10,000 Bitcoins would be worth hundreds of millions of dollars. That has to be the most expensive pizza in human history. It's a wild story that perfectly captures the journey of Bitcoin, from a niche experiment to a multi-trillion-dollar market. But Bitcoin was just the first chapter. Its success opened the floodgates, unleashing what you could call a Cambrian explosion of digital innovation. Suddenly, everyone wanted to build a better Bitcoin. This led to the rise of altcoins, or alternative cryptocurrencies. The first wave included coins like Litecoin, which promised faster transaction times, and Namecoin, which aimed to decentralize website domain registration. They were all trying to improve upon Satoshi's original design, adding new features and fixing perceived flaws. But the most significant evolution, the one that truly changed the game, arrived in 2015 with a project called Ethereum. Ethereum's founder, a young programmer named Vitalik Buterin, saw that the blockchain could be more than just a ledger for money. He asked a powerful question: what if we could put not just transactions, but entire programs on the blockchain? The result was the invention of smart contracts. Think of a smart contract like a super smart vending machine. You put in a coin, a cryptocurrency, and the machine automatically dispenses your soda. The rules, 1 coin equals 1 soda, are written into its code. It doesn't need a person to operate it. It just executes the agreement automatically and transparently. Smart contracts turned the blockchain from a simple accounting book into a global, decentralized computer. This single innovation was the launchpad for entire new ecosystems. It gave us decentralized finance, or DeFi, where you can lend, borrow, and trade assets without ever going through a bank. And it gave us NFTs, or non-fungible tokens, which use the blockchain to prove ownership of unique digital items, revolutionizing everything from art and collectibles to gaming. Today, there are thousands of altcoins. Some, like Ripple's XRP, are designed specifically for banks to make fast, cheap international payments. Others act as utility tokens, which are like digital keys that grant you access to a specific service on a blockchain network. The crypto world is no longer just about Bitcoin. It's a vast and diverse landscape of specialized digital tools. So you have this grassroots decentralized revolution bubbling up, creating new forms of money and new financial services outside of the traditional system. How do you think the old guard, the central banks and governments, reacted? Well, at first with a lot of skepticism, maybe a little bit of fear, but they couldn't ignore it forever. The rapid growth of crypto forced them to pay attention. They started to see the potential benefits of digital currencies: faster payments, lower transaction costs, and greater efficiency. But they also saw a threat to their control over the financial system. Their solution? If you can't beat them, join them, but on your own terms. This brings us to the next major phase in our story: the emergence of Central Bank Digital Currencies, or CBDCs. A CBDC is a digital form of a country's official currency. So a digital dollar would be a CBDC, a digital euro would be a CBDC, and so on. Here is the crucial difference. Unlike Bitcoin, which is decentralized and has no central authority, a CBDC is centralized. It's issued and controlled directly by a country's central bank. It's a direct liability of the state, just like the cash in your pocket. In essence, a CBDC aims to give you the technological benefits of a cryptocurrency, the speed and ease of digital transactions, while maintaining the stability and trust of traditional government-backed money. So why are governments so interested in this? The motivations are different all over the world. In many developing nations, a huge portion of the population is unbanked, meaning they don't have access to traditional banking services. CBDCs offer a way to leapfrog this problem, providing access to digital payments to millions of people through a simple mobile app. It's about promoting financial inclusion. In more developed economies, the focus is different. They see CBDCs as a way to upgrade their existing payment systems, make them more resilient, and foster a new wave of innovation in financial services. It's about staying competitive in an increasingly digital world. And of course, there's the element of control and oversight, which is a major point of debate around CBDCs. What started as an exploration by a few curious countries has now turned into a full-blown global phenomenon. It's not an exaggeration to call it a global CBDC race. According to a tracker by the Atlantic Council, an astonishing 134 countries and currency unions are now exploring a CBDC. Together, these countries represent 98% of the entire world's GDP. To put that in perspective, back in May of 2020, only 35 countries were even looking into it. The pace of this shift is breathtaking. And some countries aren't just exploring. They're already doing it. The undisputed frontrunner in this race is China. Its digital yuan, or ECNY, is the world's largest CBDC pilot program. We're talking about trillions of yuan in transactions already processed, involving hundreds of millions of people. But the very first country to launch a nationwide CBDC wasn't a global superpower. It was the Bahamas, which launched its sand dollar back in October 2020 to help provide financial services across its many islands. Following that, Nigeria launched its e-Naira in 2021, and Jamaica rolled out its Jamdex CBDC in 2022, and the major economies are hot on their heels. The European Union is moving forward with plans for a digital euro. the United Kingdom is exploring a digital pound, playfully nicknamed Britcoin by the press. Even the United States, which has been more cautious, is deep in the research phase for a potential digital dollar. What's also fascinating is how this is playing into geopolitics. The BRICS nations, that's Brazil, Russia, India, China, and South Africa, are all deep into piloting their own CBDCs. A major part of their motivation is to create an alternative international payment system, one that is less reliant on the US dollar. So this isn't just a technological race, it's also a geopolitical one. So where does this all leave us? We have the wild, decentralized world of cryptocurrencies on one side, and the state-sanctioned, centralized world of CBDCs on the other. Which one will win? The most likely answer is neither, or rather both. The future of money is probably not a single, dominant form, but a complex, hybrid landscape where all these different types of currencies coexist. Bitcoin and other cryptocurrencies will likely continue to fill a niche as a decentralized store of value, a sort of digital gold, and as a platform for permissionless innovation. CBDCs, on the other hand, will likely become the go-to for everyday regulated transactions, functioning as the digital backbone of the formal economy. As we look toward this future, there are a few key trends to watch. The first is the tokenization of real-world assets. This is a fancy way of saying we can use blockchain technology to create digital tokens that represent ownership of physical things, like a piece of real estate, a share of stock, or a work of art. Imagine being able to buy and sell a tiny fraction of a skyscraper as easily as you buy a book online. This could unlock trillions of dollars in value currently trapped in illiquid assets. Another huge challenge is interoperability. How do you make a digital dollar talk to a digital euro or interact with an asset on the Ethereum blockchain? It's a bit like trying to plug a European appliance into an American socket. Projects are already underway to solve this, like Project emergence, which is a collaborative effort by several central banks to create a common platform for cross-border CBDC payments. Of course, as this digital Wild West becomes more populated, the sheriffs are starting to arrive. Regulation is a huge topic. Governments around the world are scrambling to create frameworks to protect investors, prevent financial crime, and ensure stability without stifling innovation. It's a difficult balancing act. And finally, one of the coolest innovations on the horizon is offline payments. Think about it. Digital money today requires an internet connection. But innovators are developing ways to transfer digital currency directly between devices, no internet required. This could be a game changer for bringing digital payments to remote or disaster-stricken areas. The journey from Bitcoin's radical idea of a peer-to-peer cash system to the state-sanctioned innovation of CBDCs is one of the most compelling stories of our time. It's a testament to how quickly technology can reshape fundamental aspects of our society. This evolution isn't just about creating new coins or faster payment apps. It's about completely rethinking how value is created, stored, and exchanged. It's about building a potentially more efficient, more inclusive, and more interconnected global financial system. The road ahead will have plenty of twists, turns, and challenges, but the promise of a digital future for our money is brighter and more fascinating than ever. That's all the time we have for today on G Fun Facts Online. What do you think the future of money will look like? Will you be using a CBDC, Bitcoin, or something else entirely in 10 years? Let us know your thoughts. Thanks for listening, and join us next time for another deep dive into the amazing world around us.